How's it going this morning?
Everything's going great, Roy. How are you doing?
Well, it's a momentous day in the history of America today, and I'm sure you want to join me in wishing Conor McCann a very happy birthday.
Happy birthday, Connor.
And we do have a new administration in today, so good luck, and thank you to the last one. So moving forward, Jeanette, I did an open house last week, and it was absolutely incredible. I advertised it. The owner was a senior citizen, and I needed to get some people into the house, and I adhered to the COVID guidelines, and everyone had to wear the covering, signed a disclosure. We had offers on the house based on the wonderful photography by BH Photography, Brie Hunter. We had offers on the house before we opened up the door. We have 1 month inventory right now. We're listing 80 homes a day. We're selling 90 odd homes a day. Inventory is really tight right now. It's absolutely incredible. So we're seeing multiple offers. We're seeing people paying overpriced for homes. They're waiving appraisals, or they're willing to pay more than appraisals. That's where the market's going right now. It's absolutely staggering. There was 40% less homes sold in December this year than there was last year. So we're seeing this market at the minute. It's a crazy market. What advice have you for anybody right now that's thinking of buying a home and getting their offer accepted?
Sure. So first of all, I still think it's a great time to buy a home. I know some people tell me they think, what if we see what happened before, back in 2010? The sources that I follow, they don't see that happening because we don't do stupid loans. Everybody qualifies for their loan today. And what that means with what you're talking about is we have to get a little more creative, because sometimes the appraised values don't come in at what people are paying, and the sellers are still expecting them to pay the same price that they've agreed to. So one of the ways that we've gotten really creative is with regards to mortgage insurance. Can I give a brief background of what mortgage insurance is, Roy?
Yeah, I think it's one of the most misunderstood things, because I know a lot of people say to me, oh, I want to save for more money down so I don't have to pay PMI, and they have this misunderstanding. But I know you're going to share with us that there are some great benefits with PMI. So could you tell us basically what is mortgage insurance? Why is it needed? And the different ways it can be used, and does it ever go away? Could you share that with me?
Certainly. So mortgage insurance, like you said, people don't understand what it is. So the first thing is that it's a benefit for the lender, not for the client, but the client gets to pay for it. It's required when they aren't putting 20% down, or if they're doing an FHA loan. FHA loans require it regardless of how much money you're putting down. FHA mortgage insurance, they have two types. They have what's called an upfront mortgage insurance, which gets financed into the loan. And then they have a monthly mortgage insurance. And like I said, the monthly mortgage insurance is never going to go away on an FHA loan. There are some situations where it does, but in the majority of cases, it stays on for the life of the loan. Conventional mortgage insurance will fall off at some point. It stays on typically for a minimum of 2 years. And when somebody has reached 78% of their original appraised value. So the conventional mortgage insurance is where we've really been able to get creative with the situation that's going on right now when a home doesn't quite appraise for value. The FHA mortgage insurance is the same. It's a flat rate for everybody. Everybody pays the same amount, regardless of your FICO, regardless of your debt to income ratio, regardless of anything else. And there is some chatter that with the new administration, they may be lowering the FHA mortgage insurance a little bit. So I don't have anything on that right now, but hopefully down the road, we can share some of that good news with your clients.
And can you get a conventional loan with as minimum as 5% down?
You can get a conventional loan with 3% down. You have to be a first-time home buyer.
Okay, but you still have to have anything less than 20%. You're still going to have the mortgage insurance, right?
Right.
Okay. All right. Wonderful. Go ahead.
On the conventional mortgage insurance, there's a lot of factors that make up what that mortgage insurance is. And so that's where working with someone that really understands it, You can
Yes.
play with the numbers to get lower mortgage insurance. So one of the factors is, are there two people on the loan? So even if we don't need both people on the loan for qualifying, it can reduce the cost of the mortgage insurance. The other is loan to value, FICO scores, debt to income ratios. All of those things factor into the mortgage insurance cost. One of my clients that we just closed escrow on was buying a home, and he was putting down 9%. So he didn't quite have 10% to put down, but he had 9%. And he agreed to pay up to $20,000 over appraised value should the house not appraise. And the house didn't appraise. And what I was able to show him, most people think, okay, if it doesn't appraise by 20,000, I have to bring in $20,000 more. But what we showed him is he could just increase. I mean, it's just semantics on my end. He didn't increase how much he was putting down. He didn't change anything on his loan. His payment didn't change. Nothing changed. It just went from being calculated as a 91% loan to value to now we were at 95, but nothing else changed. So that's like the perfect scenario. Like, I don't get that very often. Most of the time what I see is people are putting down, I mean, they work really hard so they can put down 20%, so they don't have mortgage insurance. But if they have mortgage insurance, especially if it's just a little bit, maybe they're putting down 15%, that mortgage insurance, because they have it, will give them a slightly better interest rate.
Right.
And the mortgage insurance will only stay on for a short period of time because they're putting down more money. They have, a lot of equity already in the house, and they're going to pay it down. So the mortgage insurance for a conventional loan will fall off. And sometimes we also show them how they can do what's called upfront mortgage insurance, where you pay a small fee one time, once and done, and you don't have monthly mortgage insurance. All those things are tricks of the trade, if you will, that we use when we're working with clients to figure out the best way to structure the loan for them, because no two situations are the same.
Correct. I understand. Great information. Which brings me, we mentioned appraisals. Now, Jeanette, we list our homes. We do so based on, our market evaluation, and then an appraiser comes in, and sometimes they come in with a value totally different from what we expected it to be. So let me ask you, first of all, explain the appraisal process and how do you dispute it if necessary, if it comes in lower than the list price or the sales price, sorry.
So there is a process to dispute appraisals. However, I will tell you, in my experience, it's difficult. If the appraiser is local, which all of our appraisers, one of our company's requirements is that appraiser is local to the market. So if an appraiser is a local appraiser, they should know the market. The appraisers typically should also reach out to the agents, and that's why it's important for the agents not to just say, here's the lockbox code, go in. But if you're concerned at all, a good agent should meet the appraiser there to help provide additional documentation and make sure that you get your voice heard. But there is a process in place to dispute appraisals. The other part of your question was, what was the first part, Roy?
Well, just first of all, was explain the appraisal process, who orders the appraisal, who pays for the appraisal, and then again, where and how would you dispute an appraisal that comes in lower?
So the appraisal for most loans is ordered by the lender. So you can't choose your own appraiser. We can't choose your own appraiser. We have to order it through an independent appraisal management company, and they're going to place an order with an appraiser that's on our panel. Again, that has to be local to the community that they're doing an appraisal in. And they do that so that it's a neutral person. They don't want the bad guys, the lenders, to be influencing the appraiser's opinion of value. The appraiser is given a copy of the purchase contract, so they know what the purchase price is. They know what the target is. But that doesn't guarantee they're going to bring it in at that just because we want them to. And an appraisal is an opinion of value, and it is an opinion, and there's some logic that goes into it, but it's an art, not just a science. So there are some industry guidelines that they use for how much the value is for certain things, but they may give a pool and spa value of $25,000. Well, if you've built a pool, you probably know it costs a lot more than $25,000 to build.
Sure does, yeah.
That's the area that we'll see, if you get a home that's got a beautiful backyard, a pool, rock slide, waterfall, the whole bit, somebody may be willing to pay more than $25,000 for that pool. So that's where the value may not quite hit, because you've got extensive upgrades to the house or the backyard or something like that. So that's where, again, knowing that how to use that PMI tricks, mortgage insurance tricks, can be super beneficial.
All right, Janet, I think you helped us with a recent purchase loan. My understanding was the first appraisal came in low, and we were somehow, maybe it was with a different buyer, we were able to get a second appraisal. Now, could you share with me, is that whenever an appraisal is done on a property, how long does that stay with the property? How long is it valued? How long is it good for?
So again, depending on the type of loan and the type of appraisal, FHA appraisals stick to the property. That's the only one that sticks to the property.
For how long?
I believe it's for 3 months.
Okay.
3 months, and I think we can get an extension to 4 months. We've done that a couple of times. Which in this market, you may not want the extension, but that's a possibility. VA appraisals are transferable from the same borrower on the same property. So if somebody were to change lender, they would be able to take that appraisal with them. Conventional appraisals cannot. Conventional appraisals have to be ordered by the lender that's doing that loan. So sometimes we'll have an appraisal that's already done, and we can provide the appraiser's information to our appraisal management company. And if that appraiser is on our panel and approved with our company, they may be able to reach out to the same appraiser, which can speed up time, but they can't just turn around and use that same appraisal.
Okay, right now, how can you share just with the number of loans you're doing? And I know you're having off to another fantastic year. What are you seeing with appraisals right now? Can you share a little about that or not?
We're seeing a lot of them that are coming in a little bit on the low side for purchases. It's just a challenge in the market that we're in right now, because there's such a lack of inventory. People are willing to pay to get into their house. So it can be anywhere from, I get them that come in at value, and I just had one yesterday that came in probably $35,000 short. Again, we used some strategies with that client. We knew going in, the appraisal probably wasn't going to come in. So the client was putting 5% down, and we just restructured it a little bit. So now, he's bringing the same money down, but it's now, instead of a 95% loan, it's a 97. So we have to make sure he meets the guidelines for that, which he did. And then I think he has to bring in an extra $5,000 or $6,000 on top of what he was originally planning to bring in.
Okay, great. Last item today, I just wanted to show you this slide. Just shows you the US weekly average mortgage rates over the last year, which is quite amazing how those rates are going down. So as you said, no better time to buy a home, and with low inventory, no better time to sell a home. If you're going to get multiple offers and people are willing to pay, how do you think these rates are going to go the next year? I have seen the prediction that I think they're, what are they, about 2.9 right now, even lower. They may go up to 3%, but oh my goodness, 3% mortgage rate? That's incredible. What's your predictions?
I follow a lot of industry experts, and a lot of them are predicting that rates are going to stay low this year. So at least the first couple quarters, they're expected to stay low. So hopefully that stays the same. But we're about almost 1% lower this year than where we were this time last year. And that's a huge difference. So what people have to remember is, even though the home values, let's say the home values are a little high. Let's say that you pay $10,000 more than what the house is worth, which, worth is in the eye of the beholder. You have to ask yourself, are you comfortable with the payment? Because most people are payment sensitive, not what their house is worth sensitive. So if you were of the school to think appraisals are going to go down or values are going to drop, let's just say that you waited 6 months or a year and you could save $10,000 on the price of the home. Well, if that interest rate were to go up by 0.5%,
right,
not much at all. I mean, they've dropped 1% this year. Your payment would be more on a house that's less. So are you buying for the price of the home, or are you buying for the payment of the home?
right. Jeanette, great information. Let's do it again next week. Great. Jeanette's number is on. You can hear a lot of detail about what Jeanette shares, a lot of experience in the market, and no two buyers and no two situations are the same. Give her a call and let us get you into a new home in 2021. Thanks again, Jeanette, for joining me. Have a great day.
You're very welcome, Roy. Take care.
Bye.